Yes, how are you guys? Market Sniper talking with US indices. Yep. So seminal week last week. Many people, look at the rally, bounces full in, blah. All of this. This is the Dow on a daily. This is our cranky. That's not a head and shoulders draw. The complex head and shoulders. Go to the marketsniper.com, learn how and why we draw them like that. What's the reasons, where they come about, why they have a decent chance of working, etc., where your stop would be, on and on. Anyway, as we move through this, you could see almost look quite positive at one point over here. This could have been deemed a squeezy for upside, looking to take on the new neckline, but whoopsie daisy, inflation, higher rate rises, and spiller, absolute thriller all the way from Manila on a Malaysian Airlines that didn't do any submersive activities. 311447 down from 32800, quite a reasonable sell. And of course, this is official target, but this would be the beginning of a much extended move, in my opinion. So it's not actually very far away from our target that we called some time ago, whilst attempting to debunk those that were calling for a 60% pump in 4 months. As I say, we'll leave them in peace for now, because we don't want to hear that every day about that particular call, but how they didn't see this run up from 18 to 37 as being absolutely a 7 trillion market cap pump. I don't know. That was your blow off, friends. Anyway, license to kill, license to spill is the current situation in terms of where we're at, and J Powell has it. Even if you do basic Elliott wave and you say, no, we've already had a one leg, a one rally, a two leg, and this is just your second rally, you still got a 3 leg to go. And that's a very truncative way to look at it, because it's just looking at on a smaller, this particular time frame, the daily time frame, you would still have more downside to go. So let's do that Elliott draw for you. This is the Dow 30, by the way, where there's more companies that actually have some earnings in it than there is in the Nasdaq. I'm going to drag that right over. Listen to those crickets sing. You've already made that one leg move down. That means the original leg move down, you made the one leg move down in this secondary selling leg. So A, B, C, D. We're seeing this as a real spill, and we expect this low to be run, and we expect the head and shoulders target to fall, but we expect that to be a smaller fractal of a much bigger potential downside move. Generally in asset prices have never been so highly valued, and this is all part and function of a greatly hyperinflated market and world that I think to introduce the new system they need to see die. If we have a little look at spills here, you'll see this as a percentage, just benchmark that baby. That was COVID. Now Klaus has said you will have a crisis even larger than the COVID crisis that could involve bank hacks and various other things. Let's leave that on. Sorry, I didn't get the number there. So from that high to that low, you actually had, in percentage terms, 38.45 on the Dow, 38% on the Dow. If we just measure this, fine fellow down so far, you've barely had 17% on the Dow. That is a double, and that's if it's just to be the same, not to be any larger. I think this is a seminal crash that we are being prepared for. Anyway, let's have a look at the SPY. SBYII, take it into the daily. Again, what a lovely little throwdown. Gapping down, gappy. That's very pretty. Sometimes in terms of a move, the 50% of the gap will give you, let's get on the top of that. Put the 50% in the middle, roughly there, and that will show you, oh, isn't it nice? That will show you where your next rally will be. That'll be after the head and shoulders target, if you put the 50% in the hole of the gap. But I'm not entirely sure if that grabbed the high point. Did it grab the high point? Why is there a line there? Maybe I drew that line. I'll go have a look. So this head and shoulder, a little bit easier for many people to see. This was the stronger right shoulder. That churned and then went. So that's a stronger right shoulder. That's your break. That's your neckline 427. You were as high as 480, 180. By the way, looking at this on a bigger time frame, boy, oh boy. There's a little bit of a pumpermental. Where's my blow off market? Here it is. Okay, I've done a lot of this already on previous videos. I'm going to give it a rest. But this is a substantial sell-off. How much was that on the SPY? So you had 38 on the Dow. The SPY is a broader index, and you will get that, and you have 35 on that one. How far have you fallen so far? So how far did that fall on the SPY? Let's have a look and take that fib off over there. Take you back in. So far, in terms of measurements, you've had a 20% on the SPY. Don't forget, that was 35. So it's not even matched COVID by some way, by 80%, still more to come. If it were to, and if it were to surpass, then it would come a lot lower. So in terms of the World Economic Forum, we can only go on what they say. They have a habit of making very good predictions. Yeah, unbelievable. These guys, so capable, so smart. Nostradamus. Anyway, let's drop into the shorter time frames. Nice little head and shoulder we drawn and highlighted to our community. The gap opened, just boom, straight away, straight through it. So that mini little structure instantly performed on a tiny little trade if you're into the shorter time frames. Yeah, so that was good. No visit to the neckline. This is down. Overall, for me, this is weakness in the indices. Do you expect them to come wading in and buying it on Monday? Well, I would be a bit circumspect after that inflation report and how the Fed's going to continue to look very, very stupid. Let's pivot to the Nasdaq. I mean, this is one of the cleanest and one of the most overhyped market. It's everything surveillance finance, Schmoogle, FaceAche, all the CIA's projects, deeply embedded in these oligarchical companies that are pretty satanic by all forms of measures. And this is a macro head and shoulder, big grinding head. And then there you go, there's your right shoulder, kind of spiky and volatile. You broke there and you gapped through that little mini. So there were a number of places where you had these mini head and shoulders down through the neckline, boom, like that. Didn't quite make that down leg in terms of the extension, but you've got a lot further to go for these. This looks like a 1.618, and by the way, we take you up again to the daily, and you can see how far it's come since then. I mean, boy, a lot of that 7 trillion sure went into the surveillance finance, social media, prisoner system that they want you in, the digital capture, and boom, like that. That was down 32. Now, if I draw it down to the absolute low so far, you've only done 31.82 on tech. So tech has actually adjusted a lot more, but it's going to roll into the real world, which is why tech will overshoot. And right now it's only, as I say, at 30% down. And let's just do that measure again in percentage terms. 32.59 in percentage terms. So it's still substantial correction so far, with more to come. But let's just be clear on those down legs. Who had the biggest pumpermental? Well, you went from the level of 6,000 to 16,000. That's your created money. That's your created money on the COVID narrative, and that's how far it took you. And pretty much in the absence of new money, and a lot of people needing to get out, this is what kind of tends to happen. So I think this is going to turn into, you're going to run that target on the head and shoulders at 9. You're at 11. As I said, we called this substantially before the triggering of event. That was the neckline at 12,750. And you could have a secular, much bigger secular overall pullback on a much larger scale. So let's just take that off. You know, last time you had such extreme moves as this run up here, from here into the blow off. So that was irrational exuberance, Greenspan error into that. You had a very substantial retrace. I think this is possibly going to surpass the dot-com correction and the great financial crisis. That was a 78% correction. That was epic. That was the dot-com, and that was 55. I think you have the potential to exceed GFC and potentially to exceed this. I'm just going on what they are telling you. Let's just go on what they are telling you. They are telling you bigger than the COVID crisis in effect. And if this is the end of the debt market and the money that's being created, and we're going to see major collapses in bonds, equities and bond markets are going to be sin. And people will be calling bottoms. Kramer will be calling bottoms. Everybody will be calling bottoms on these equity markets to an extreme degree, and they will have further to fall. And as a result, I would say to you, you've got to be out of risk on assets. Gold is your friend, cash is your friend, bonds are not your friend, and indices are not going to prove to be your friend. And people that say, oh, that's too bearish, such big numbers, 78%, 55%, you're on drugs, we've already done 30%, we have yet begun to finish. If they stopped at September on their half-point increases, assuming nothing has broken by then, if they even got that far, the interest rates will have moved substantially more. The bond market will have moved substantially more. The valuation in bonds, don't forget, most people who are hedge funds, including Tony Robbins, who ran in to say 60-40 is the way. This is the portfolio that has kept you, safe. The special secret sauce, have 60%. No. Absolute garbage. Absolute garbage. The bond market is collapsing and the equity markets are collapsing. It's going to be an event where both collapse together. Having the one hedging the other is not going to be what functions for you. It's going to turn out really problematic, and I would say do not participate in that. And when you get a retail guy who's never really been specifically about finance suddenly enter finance with all these interviews of big leaders and coming with the old 60-40 portfolio of a generation and the special sauce that lasts, be more cynical. This is reset times. The buy the damn dip equity and bond model that functions so well in a fiat proliferation central bank cartel that was finding every single reason under the sun for wars, for sickness, for pandemics, for oil, for every single reason under the sun, proliferated debt, money, and continued to create. Inflation was always their policy. It has always been their policy. It is their primary gain, and they have always consistently said it's not there, when in actual fact you had it all the time in asset prices. They have sold you the lie into your Bolshevik communism. This is the great lie. Sound money is gold. Sound money is silver. And be very wary. I'm not saying don't have Bitcoin, but be very wary of the digital solutions that are on ramps to eventual capturing you. Yes, I will buy cryptos for the upside as a speculative asset for upside and treat it as a high beta speculative asset. But don't think you're getting your freedom. Don't think it's a libertarian move. Don't suffer the fallacies of the original Satoshi fairy tale story that no one can really confirm who or what he was. This was set as your on-ramp for onboarding into digital everything. So that's your Nasdaq composite. You could have the mother of all crashes from here. That people have they lack scale and macro to see how brutal potentially this could be. You could, in actual fact, return. Let's go to an even bigger time frame. Let's get an annual chart on here. When you look at bigger charts, the possibilities become more plausible. You could return to .com levels and still not have had as big a crash. Let's just measure that in percentage for you. And that is 12 months. It's maybe a bit granular. I'll go, let's go down. That would be an 89% into the mix. An 89% crash back to .com levels. That would be an unwinding of debt. You could even go lower. It could be, that's not a prediction. I'm not saying that will happen. I'm saying you have an entire debt Ponzi scheme that has been accumulated since the 1900s, the Federal Reserve creation. You have a 40-year bond bull market. that has to unravel. So you have the ending of a 40-year cycle and probably an 80-plus cycle within that. You have to have entire abandonment of pension schemes. What do you think is going to happen to these asset classes? Well, they'll create stimulus. Well, they will do various things. Yes, okay. I'm not saying it's going to lose 92%, but I'm just saying the imagination to consider that is required to realize that we are likely to have a much bigger sell-off than you can think. And over an annual period, look at these sell-offs. When you do get the bear sell-offs, and here you had 3, it was substantial. In the great financial crisis, actually you only had 1 red year. Ignore spinning tops. Ignore spinning tops. You are going to, these are all minor events. That was a bear of 74. Literally, you're talking about anything that was a substantial candle was either 1974, ergo, the great stagflation, hello, hyper stagflation on new era, the dot-com boom, and actually looking quite short in general terms, the 08-09 event, when you look at it on an annual basis. 1 big red yearly candle, and thereafter back up again. Why did equities have a culture of always going up? Because the solution was always to print, and the inflation was running into assets. If debt fails, equity fails. If debt fails, equity fails, because the printing of money is a debt-based arrangement. You accelerate the failure of debt when you continue to print more money, because it requires more tertiary extraction, more interest, and a hyperbolic need in an ever-expanding universe that is inflicting buying costs changes on you in terms of your commodities and huge asset price ramps. This is their scam. This is their scam. If this is the end of the bond cycle, it is also the end of the creation of money through debt cycle. All that money that they create will come at exceedingly high interest rates, which will lead to debt payment failures and bankruptcies, which will see most of these equities that have borrowed lose an immense amount of money. You'll have a cessation of purchases. Retail will be flawed. Everybody will be at the mercy of this old world order that will be seizing digitalized surveillance, finance, and control over your lives. Be careful. This is dangerous times. We are talking with our community every day on how we are preparing for exactly that. And even still, with the best laid plans of mice and men, we still expect there to be great concern. 6 months in terms of half years, you got 2, 3, 4, 5, 6, and you had 2 in the great financial crisis. If you think this is the only candle to the downside, I would like to suggest that you could get closer to this number than you care to think. You should at least have another 6 months of similar, and potentially a number that could meet or even surpass this. This indeed could be bigger than the great financial crisis. Okay, those are the indices, that debt market. I will cover the debt market. This is important for understanding why the financial and the FX markets, the release valves for that debt market, are moving as much as they are. And that is absolutely simple. We are in a failing debt environment. You're going to get sick and tired of hearing that word debt. You have a debt-based system. That is everything. Money is borrowed into existence. Money is borrowed into existence. Let's have a look at those debt markets. So what happened? Wow, this is a proper end of cycle move. And boy, were we the first and only ones I know to call this, and only recently have we been joined by the likes of Mike Maloney and 1 or 2 others. This was a final capitulation, log scale chart that saw the events of CV19 March 2020. This break had a small pause at the key 3% level. It had a small pause. You can see these levels here, because it had previously proven 3% resistance here and down, resistance here and supersell down. Whatever gets hyper oversold, ergo oil, the one we call to single digits, the snapback is of equal geometric scale. This is macro technical analysis that nobody is doing. We keep saying we're the only one out there. We're not the best one, we're the only one. That doesn't mean we're good. It just means we're the only one doing it. You got one pause, shooting star, should be a pullback. No, straight up, new data, inflation, fail. This level will be broken, this red line, and that will be the end of the hyper stimulus, mega low interest rate environment that kept this zombie economy alive. Put it in that pink box, TG box, where pink. There you go. Hyper stimulus period that all came out of this structure, which was the previous crisis they engineered for you right there. That happened with that spill in there that brought you your spiller and your thriller inverted HVF target for down there, which all engaged the 2008 and 9 great financial crisis. There she blows. That is how you have managed to continue to still have an economic existence on life support, where you need this adrenal syringe jabbed into your heart to not die of the overdose of debt that you've been given. Super low cost of debt. Now, as the debt-based system fails, the cost of debt is going up. That will see further debt failure. It is a feedback loop, a negative feedback loop. This technical run on this red lines level is going to be devastating for the debt markets. Devastating for the debt markets is all money was borrowed into existence is going to kill money. The banking system will fold. Hence why they talk of banking collapses. Hence why you should have as little money as possible in the bank accounts and as much gold and silver as possible. This is where we are at right now, guys. This is where we are at right now. How much gold and silver do you have? How much tangible do you have? Property will fall, yields will pump, super spike, Goyim will be flushed out of their homes where they have borrowing. BlackRock will be there with endless bottomless overdraft to buy them all up on the cheap and turn you into a tenant in your own homes. This is the debt. This is the end of the debt cycle, my beautiful, beautiful people. How prepared are you? Is this a horror movie I am spinning for you? Do not be afraid. This is all game theory. You are here on this planet to have an existence. View it as an opportunity to be a player in this beautiful virtual world. Only this one's real. The one they're taking to you is in an arcade box. Stay in reality and enjoy it. Enjoy your lease on life. Understand what I'm saying. Make plans, make preparations. Your banks will fail. Again, your banks will fail. Your banks will fail. Debt will fail. This is coming. Hear me. It doesn't sound real. It's going to happen. It doesn't sound real. It's going to happen. It can't be stopped. It must happen. They have a new system planned for it. Problem, reaction, solution. All sorts of shortages. Maslow's hierarchy of need. You're going to battle for the lower end of all of that. They are engineering all sorts of aspects behind your back that you are not familiar with. Get out of the banking system entirely. Get into physical. It is the only carryover bridging wealth. Forget your 60-40 bond equity portfolio. It's all going to go to zero. Traditional advice is exactly that, garbage. For a buy the damn dip meme that existed for the last 40 years on an expanding bond market that continued to get better valued even though they were issuing more debt. Where have you ever heard of an expanding supply of something that goes up in value and becomes more expensive on a sustained 40-year basis? Only manipulated markets and manipulated down interest rates that are being controlled by a cartel that have been holding gold and silver down to support a debt-based Ponzi system. If you do not get that, you do not understand what I'm telling you, you will not be saved. That is my opinion. I can be wrong. It is on balance of probabilities. It's following 40 years, going on 40 years, 35, 36, 37, God knows, I can't even remember anymore, of study of economic financial systems. This is a key reversal in yields. This is a key reversal in yields. You are segments away from breaching a red line that on balance of probabilities you will never see below this green line again once you've breached. You will run. Key levels are broken with momentum. All our laws technically are telling you that. They are broken with momentum to the upside, and then you will sit down in this level, and then it will only be upside from there. And before you get anywhere near the levels of Faulkner, it will be game over, bank hack, it's coming. Reset will possibly happen even this year. I'm saying to you, I'm warning you. You cannot sit on your laurels and I'll say, I'll wait till I can smell the smoke or that I see fire. It's already burning under your feet. You will be caught out. The things you will have to do to take action will take time. They will be known and they will have restricted it. They are capturing you. You are rats in a barn that are being captured. They are not leaving a door open. There is already smoke. Take it from me. The barn is already on fire. You need to leave it. You need to find pastures anew. You need to pack your bag on your little rat back and you need to rat-a-tat-tat over that hill with your gold and make out like a banshee somewhere else with little rat girlfriend and little rat everything else, because this barn is being burnt down. It is based on debt. The fire is already lit. You just haven't sussed it yet. That's where we're at. Okay. So, with that preaching like a Baptist Manic Street preacher on the street corner there with his wino bottle and everything and belly aching like it's doomsday is nigh, we will move on to TLT, 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 TLT. So we take the eye off. That is not a nice chart, my friends. Where's my blow off? Here. Here's a blow off. Here is a blow off. Guess what? You've come right down to here. Higher highs, higher lows. Not anymore, sir. Not anymore. Run this low, which you're not very close. Key reversal. Head and shoulders reversal. Called by us. Up top here, where we said this was a blow-off and an end. Before anyone else. And watched an inverted HVF. Nobody else has seen that. There are no other macro-technical people. Some people like to think they are. If you aren't looking at monthly charts, you're not macro-technical. Bloody hell, I get so belligerent and pissed off. There's so many frauds and wannabes that don't do what they should be doing, don't make the calls they should be making. They don't, they don't protect people from the inevitability of a system collapse. They are waffling on about buying the damn dip and wearing diamonds. This is a sell. This is a sell signal. We called that. That was October that broke. We were already suspecting it when it broke the grind line in August. We felt this was a blow-off way back in March and April. We waited for the structure to follow. High slung. First inverted HVF in a new trend. Golden rule. Steeply ascending. Lots of price behavior near the top. After a mega volatility spike. Slap in the face event. Go and watch my materials. Lesson 101's. Advanced HVF method. It's in the bloody technical manual that I personally wrote, that you will not find anywhere else in any other technical goddamn journal that calls major reversals using HVF method. Go to themarketsniper.com. Start understanding what's happened. We're the only voice that said it. It happened there. We're the only voice that said it again. It happened there. People are only just waking up. It's going down. You are watching the barn burn and nobody can smell. I'm the only man with a nose. HVF method is your nose. Get it on your side. Start making the plans. This is John the Baptist speaking of the coming of a different kind of king. And you do not want to be a rat in the barn. Okay. Here he goes. What a day. What a pitch, this man. What does he take? Some of them say. It takes passion. It takes anger. This is what you hear. I don't use substances of any variety. I rarely drink. It takes pure fuming rage at the incompetence of all the people on all the different fin-twit media that lie, deceive, don't understand, don't truly love, are not passionate about charting. Absolute final capitulation, damn it. What can't you see about that? That is an absolute technical analysis 101. That's not my principle, that's not HVF, but nobody goddamn applies it. New first upside HVF in a new trend. Plus you had a squeeze out of that one. Big move. Overperformance. Yes. Target there, you're up there. All same chart, same conclusions, same analysis. Different drawings, same conclusions, same data. That's what happens with consistency. Italy. Damn it, the yield on the 10-year Italian. How do you like them apples for a wee little breakout? You think that's going to cool down? You think I'm going to be buying Italian debt? Good luck, sir. Good luck indeed. Look at this logarithmic scale. Regular. There you go. Rounded base. Rounded bottom. Boy, don't we like a rounded bottom, he always says. Yes, he does. He does indeed. If you're wanting the yields to go up and you want the Ponzi scheme debt to go down, but believe you me, you're going to get a lot that comes with it in terms of social unrest, in terms of goddamn everything. We're all going to be rocked. I'm not wishing it. It's them that built the system. It's the perverts, the criminal cartel that maintained it, continued their scammy, and they're going to rain it down upon you, and you shall feel the might and the wrath of the greed of these leaders. Oh, yes, sir, indeed, indeed, indeed. This is preaching. This is full-blown Baptist preaching. Head and shoulder there. Everything technical has been absolutely on the money. It's how it works. Super low, W bottom. That W bottom has performed. You can actually claim a little bit of a complex, inverted head and shoulders, left shoulder, W head, right shoulder, major move to the upside. That was warning you. Italian yields are going to go up. This now is a resistance point there and a little HVF there at a key number 3, and that is how you are moving on Italian debt. Good luck the euro with that tightening. Good luck with removing the liquidity. They ain't gonna do shit. Let me say it again. There is nothing they can do. If they tighten, this falls out of bed. They will be buying every single bit of Italian debt. There will be no other buyers in the market. They'll be monetizing like hell. That means they'll be printing euros like hell because they have to create debt to create the money to buy the Italian debt. And they will be creating money and diluting every European, and your inflation will continue higher. And you are in an absolute barn fire that doesn't get burned, that put out. The straw is alight, the wood is alight. It burns its way through. You do not have the means. That is why I am saying what I am saying. 3.85% with more to come. Target 5.52. What do you think the euro is going to be trading at? When the Italian debt market is at 5.52, do you think that's going to be the end? Was this W bottoms target somewhere around there the end? No, it wasn't, sir. You're getting new targets for new upside. You're watching debt collapse. Hear me now. Debt is collapsing. With debt collapsing, you will get a super spike in interest rates. You will get it in America too. That will lead to better money being paid in the dollar being the strongest currency. You will get a super spike of dollar strength crushing all the other currencies. All through that period, you should be buying and investing gold and silver physically held. This is what's going down. I am telling you, Manic Street Preacher is talking today. And he is telling you, you do not have the time you think you have. You do not have the time to wait to smell the smoke. If you haven't got your money out of the banking system, which is part and proxy of the debt creation cartel of central bankers and banking system, that they are busy burning down to force you as impoverished, you will own nothing slave into the new central bank digital currency, you will not carry any wealth over to the new system. Can you hear me? Do you hear me? Say I. Say I. Preach it, bro. Tell me that you understand this, because you are failing. You are sleeping on the job unless you are taking action. And it is good to take action, and it will solve all your mental woes and anxieties. Sit like a rabbit in the headlights. You will be mashed by a bulldozer that is coming at 60 miles an hour. It's a turbocharged bulldozer, and it's moving like that. That goddamn chart that you are seeing right there, that, my friends, is called impulsive move. That is called panic dumping of garbage by banking systems. And there you have a Ponzi scheme of derivatives all on top of this, for which substantial moves are now taking place. My goodness, my friends, you do not know how close things are to going badly wrong. This is your message as preached by me. Asset classes, broadly, digitized, everything down. Physically held things, gold and silver up. Property, because of leverage and interest rates and most people using debt, down initially, but longer run a good investment. If you do not get shaken out, you are not leveraged, and if you do have any, you've got a fixed rate. And even still, they might renege on it. They might renege on a lot of things. They will renege on pensions. The less debt you have in the life, the safer you are. This truly is the end of the debt-based system. If I haven't said that 10 times today, then my name is not the Market Sniper, which of course it isn't. It's my trading name. But anyway, you can go to themarketsniper.com. You can be kept awake about what's going on. Things are getting disorderly. This was a huge, huge day. If you don't think things like ARK and Tesla can do much bigger round trips over much longer periods that could see them go wee all the way back down, then you are foolhardy. You have not seen the likes of what is coming. Your frame of reference is only set by that which you have personally witnessed and experienced in your own life. Tesla, I am saying to you, you do not want to be long any form of paper, digitalized equities or assets during this period. All right, I'm starting to sound like a proper loon, and that's cool. Thank you for watching. Join us as a community that is focused on maintaining freedom, maintaining wealth in reset times. This is what we do. We are watching it. You can build wealth through this process, but understand counterparty risks, brokers, and everything. All rules and guarantees are off the table right now, but you can build wealth, and the faster you stack it in something you hold in your hand, the better you will be. Thank you so much for watching. Share and like. Hit me up with some puppy licks, some smears. It's time the world knew. We are here to tell you that this was a seminal week in a process that has been coming over decades and decades of assets hyperinflation. You will have the night as strong as the day, so dark will be the night. And guess what? It's all in the name of balance, and the morning will come again. But you have to see the night through, and it could be chilly and dark, and you could get hungry. Make sure you are in a strong position to do it. We at the Market Sniper are entirely focused on managing our financial wealth in reset season. Catch you next time. Thanks for watching.